Today I'm gonna actually add the earnings report with the trading with Livevol, since I have some guests here today. So so let's get started. Looking at my account, basically pretty flat. And I did a couple of trades today. I'll show you guys what I did. But basically, just generally, my strategy is trying to get some data and try to be positive gamma, but we'll see how that goes. Okay. So XLU, it's the utilities. And the reason I decided to trade the utility, so if you look at the chart, the volatility is kind of medium range, right? It's a 59th percentile. So it's decent, but it's not like super high. And basically, it's been pretty bullish, and it's kind of like off this 200-day moving average. The reason I did this, I know I've been talking to you guys a while now about, but a couple of days ago about like some similarities between 2000 and currently, and I just want to say that the utilities during 2000. Let's see if I can actually even get it real quick. $19.99. Done. Right. So the whole time while NASDAQ was selling off, and then eventually in October and September, the SPX and NASDAQ sold off again. Utilities was making new highs until November. So I think, especially if the market is where they're selling growth stocks and kind of going into a little safer stocks, utilities might not be a bad play to be in. So that's kind of why I did it. So I was thinking it might not be bad to start, doing some spreads, but I'm also trying to take in some data by selling some things against it, and knowing that it's maybe hit a temporary bottom or something, right? So I was thinking of what to do, and I basically came up with this trade. Ignored this trade, this thing right here, but basically what I was thinking was I was going to buy one September 38. Take this out. I'm going to put in the risk chart. Sorry. So this is my risk chart right here. Let me actually do. You can see some reason. Huh. Yeah, I can't get it to work. But basically what I'm trying to do is sell the strangle right here and collect some premium. And let me see again. Maybe I'm not doing it right. So if you see this line right here, the weird thing is it was working on my other computer. It's not working on this computer, which is very odd. but I'll take a look at it and get back to you guys. So basically, I have a call spread on, and I'm selling this strangle. So what my thinking was, the volatility in XLU is in the 50% range. So I see like June's being like around 15. So I wanted to sell the June's and buy some September calls. So essentially what I'm doing is, if it drops to 39, I was thinking I wanted to get long XLU anyway. And you know, I have the call spread on from 38 to 43, so it'll protect me up to 46 if I sell two, right? So I have like kind of a 1x2, so 38, 43, 1x2, where I'm buying one, selling two of the 43s. So my break, I start really losing once it starts going above 43, 2 to 1, right? But I don't think it's going to move that much, and I think it's on an uptrend. So I wanted to do something where I got some premium in while being slightly bullish on XLU. I actually accidentally bought this one for 413, and I'm trying to sell it for 420, but you know, that that's a little later. So originally I want to buy SEPs, and what I'm going to do is to sell these every month. So I'm going to sell a June 39 put and sell June 43 call 2 times every month, and I'm going to try to collect, you know, 50, so like about 70, 80 bucks each month, and while leaning slightly long. And I felt like if the market turned down, XLU was safer in the longer term, because people wouldn't sell the utilities as much as the growth stocks. So since the growth stock's been selling off, I thought this would be a good play. I actually got this idea from my last group meeting that I had here, and I was showing all the charts of 2000, and this one gentleman asked me about XLU, how it did, and it actually did better than both of them. It eventually did sell off with the market, but it was actually the last to go. So I think overall it's a good strategy. So I put some on. All right, Hillshire brand. So if you guys don't know, they bought Pinnacle Group for $4.3 billion. They're gonna pay $18 in cash, and they're gonna give half a share of Hillshire for every share of Pinnacle. So they then got kind of a bunch of downgrades, and the stock sold off yesterday. The thing that's kind of interesting was, while it was selling off, people are buying these OCT38 calls, and then today I noticed that they're buying the June 40 calls. So you see how 20,000 of these traded so far? If you actually click on it, I'll show you time and sale. So when people ask me like, hey, Stefan, how do you know they're all buying or selling, right? You don't really know. So what you have to do is you have to click on it, and you have to follow the ticker. So you see the first trade happened at 10:17, June 40 calls, 201 contracts for 40 cents. It was an auto execution. Look at the market at the time. The market at the time was 15 bid at 40, and all these traded, right? So bought, and then basically this trade happened, 11,850 for 45 cents here, which later they canceled, right? So you see all these buying. They finally got the offer to up 50, and then they printed it for 45 cents. Right here. And then as more time goes by, people are buying for 50, 50, 50, 50, right? So you see all the green, and even the reds. Like if you see the reds, you buy, but you see these are probably all still on the bid, right? So this guy wants to buy more, but he was maybe tired of paying 50 cents, so he put 45 cents in there, and it got hit. And later they kept on buying more. So this person, even though it sold on the bid, pretty much had a 50-cent bid in there, which was a buy. So he exhausted all the offers, and now he became the bid, and basically somebody else sold them, and so forth. So even these sells, a lot of it was kind of buy. So if you wanted to pay 50 cents, and it was 50 bid at 60, and you didn't want to pay 60, you just put in your 50 bid, and hopefully you get hit. And that's exactly what happened, right? So and then now you see more and more people buying for 45. So 19,000 of these, and then the OC38s yesterday. Basically, if I click on this, you can see the volume of 10,000, and you see the open interest. You'll see the open interest right here. It's 550, 700, and today it's 15,000, right? And it looks like people are adding on to it. So for whatever reason, and I don't know why, right? One might be that even though they got some downgrades, maybe the people who are really putting their bets down believe that this is a good deal, or maybe there's some people who think Hillshire itself might get a bid, right? Because that would make their company worth a lot more than the combined company, or they might leave, or whatever the case. It seems pretty bullish. So what I was thinking was I did want to buy these Junes, but they seem a little pricey, right? So I wanted to buy this, but didn't want to pay for it. So what I did was I sold the May 37 against it. So I do have, let me see if I can actually see it. Right here. And I did it for 17 cents. So I do have some risk, basically $3 risk. If Hillshire goes to 40, but I felt pretty comfortable that it'll hang around here for the next few days, right? So, so I'm risking $300 to basically buy those options pretty much for 17 cents. You see the volatility increasing. I'm also trying to offer some puts out, but it looks like that's not going to work. So you see HSI. I'm trying to sell some of these for 115, but doesn't look like I'm going to get them now because somebody's at $1, and I was trying to sell these for 40. But whatever the case, I'm kind of expecting Hillshire to maybe hang around this range, the $37 range, and I will get the decay here going into my bank, into the account, right? So I like these kind of spreads a lot because you're selling premium in terms of the front month, so you collect data, but then you also kind of finance your shot. So what your real bet is this with these guys, the 20,000, right? Because if they thought it was going to happen this month, they would have bought 20,000 of the May 37s, right? So the fact that they bought the June 40s, maybe they think it's going to happen in June. If that's the case, I'm going to piggyback them, but I didn't want to pay for it, so I'm going to design it where I try to sell the front month. So I take the risk a little bit now. So today is Tuesday, so I got Wednesday, Thursday, and Friday. Hopefully it hangs around the $37 range, and I can make that money. It doesn't always work out, but hopefully it does. Okay, let's go to EM. So EM, as you guys, I don't know if you guys follow me, but I basically sell. It's kind of my condor trade, but I'm actually not buying anything. I'm just like selling strangles, right? So I sold these. Let me actually. I sold these a while back. I think I sold them for, I want to say 20 something, but I don't kind of remember. But I want to buy these back, and I've been selling these calls. So far it's been working out pretty well. Once I get filled, I have an 8-cent bid in here. Let me actually see EEM. right? So I sold them for like 19 cents, 22 cents. I'm going to try to buy these back for 8 cents, right? As soon as I get filled, I'm going to sell the next month output, right, the July's. And then I wanted to sell these May's, not 23s, May 30s. But basically, every time I click on it, all people are doing is buying. So it got me a little nervous. Except this one was a sell. So I guess this one just came in. But earlier, all these were buys. Now I would feel a little more comfortable maybe selling some of these. Let me see when this happened. Right, so this was actually part of a spread, so it wasn't even, so you can't even, let me see the stats. Yeah, it was part of some kind of spread, so my thinking is it's not actually a standalone, and then it looks like people are buying these. So order flow is very bullish, so the last thing I want to kind of do is sell more calls. Normally I'll just sell them, but I think I'm going to wait a little bit. So I'm going to jump a little bit back and forth because Macy's, they have their earnings tomorrow before market. Yesterday, I tried to sell these at 70, and I actually got a fill. So let me see. I think it was 70. Let me. Yeah, 70 cents. So I sold them for 70 cents because I didn't think that Macy's was going to move, and it was kind of moving right back into the middle range. So I kind of liked it. So I'm trying to figure out a way basically to get more premium. So I sold this strangle 3 times. Not a lot. Nothing to that can really, really hurt me, but just enough to get some money here and there. Macy's actually, it's implying an 8.3% move, and basically it's moved 5.3% the last 4 quarters or last 4 earnings announcements. So you know, I'm kind of thinking like they'll have some pretty good earnings. But maybe they'll be kind of capped at around 60 bucks, but we'll see. And these expire this Friday, so they don't have too much time left. Basically, 2 days after they announce, or 3 days is what they're going to have after they announce their earnings. This DFC Global Corp. Basically, as you guys know, I was doing this spread where I was buying these back months and selling the front month. And usually what I do is I just do these spreads and hope that these become worth more than whatever I did it for. So I paid 15 cents for this October-May 10 spread, and then I paid a dime for the July-May spread. And let's see these. Yeah, so it looks like people are paying a nickel to close them out. Let's see, the open interest had held pretty steady, but it doesn't look like anything's going to happen right now. But it's kind of like I put it on, and I don't think about it too much. I just kind of wait for it to either pay off or not. Staples. So a few days ago, pretty much people are buying these calls, right? These May. On May 12th, they were buying these. Looks like they traded about 11,000 traded, probably around 20 cents. So May 9th. So let me actually go to May 9th. There you go. So on May 9th, you see all these calls trading for 20 cents. It was pretty bullish. The only problem was by the time I saw it, it was already trading a lot higher, so I couldn't get them for 20. Otherwise, I probably would have picked some up. I did decide to that it was worth it to do this call spread because I thought if Staples stayed $13 or more, I was going to make about 25% return. So let me actually show you guys that. Right, so I paid 80 cents for the May 12, 13 call spread, and my basic thinking was that maybe it'll stay the same. I'll make 25% return in a week, or if it goes down, I have 20-cent cushion while that happened, right? So that's kind of my thinking. So far, it's working out pretty well. So my cushion is like 56 cents now, and hopefully it just hangs around here, and basically I get to cash out for my 25% profit, right? Let me go to Symantec. So Symantec, I did this spread piggybacking this other person's spread where he bought the Junes, Junes, and sold the Mays. And he did it for 14 cents. And basically what you had to do was have it hang around here the whole time. If you look at it, the spread, the fair value of the spread's 13 cents, so I lost a penny. But it has about 4 more days to go. Hopefully, so I can lose another 13 cents if, for whatever reason, Symantec goes really high where both of these become 100 delta, or if it goes completely down where these become 0 delta. So basically, the delta of this makes a big difference. So if they become like 100 or 0, basically they're actually going to be same, or they're right. So they're going to be same. So they're going to be 0. They're going to be all intrinsic, right? I'm kind of hoping that you know, maybe it goes down a little bit, and basically the spread is more than 14 cents. But that's why I did that trade. We'll see what happens on that front. Let me cover Facebook a little bit. So my thinking in Facebook is, you know, I was thinking like it'll just hang around here between these two lines. What is it, like 53 and change and 63, maybe. It looks like it's kind of consolidating. So I was looking at it today, and I'm thinking maybe I'll kind of like trade in a range bound for a little bit. So I like this trade, but if I have the higher side, so I'm thinking maybe which one do I roll, right? So do I roll to the May 23rd 65, which is only 16 cents, or do I roll it to like June 65, which is like $1? So I'm kind of thinking right now I'm going to roll it to June. I was looking at July's as well. They're 190. So I think June is actually the right one. So I want to sell the Junes for around $1 if Facebook stays right around here, and my front month options pretty much go out worthless. And I have a similar position in Tesla. So in Tesla, I bought these SEP 210s and sold the Junes for 2 times for $2 credit total. So $1 credit. And my whole thinking was that Tesla kind of goes out around the 190 or below by June expiration, and then I get these Septembers for free, right? So when I look at Tesla, you know, it probably might be range bound as well. So this range might be between like 176 and 220, and hopefully it'll just bounce around there. Don't know which one I'm gonna sell, but I think since it's June, I got some time. So I got over a month, so I'm pretty much not gonna touch it or do anything. Take-Two. So let me actually go to some earnings stuff. So Take-Two has earnings today after market. I did see something interesting. Heavy put buying. You see these September 13 puts. And that's way out there. right? So they bought 10,000 of these. Not sure if you know, they're worth buying. There might be some protection, but I think just looking at the stats itself, you know, people are buying May 20 puts, selling the calls, just basically pretty bearish overall. Look at the puts. So 17,792 puts was traded. 881 of them were on the bid, and 13,380 were on the offer. So basically, all they're doing is buying options. The interesting part is the vol's not up too much, right? So it's actually maybe it's already up there already because it's implying an 8.7% move, the options volatility, and it's moved 4.6% the last 4 earnings. Let me see if I can see this. So basically, looks like the straddle. So this is the last 4 earnings. These are 5 days before and 5 days after. This is the front 2-month straddle. This is the front month. This is the second month, and this is the front 2-month volatility. That's the front and second. So you can see that you would have lost, you would have broken even, you would have lost, you would have lost. So basically, in the past, it seems like many times this like selling premium in this is kind of a winner. Because it is implying a pretty big move, greater than, oh, okay, so I just got filled on my EM, so I'll go back to that a little later. So yeah, so to me, it's implying a bigger move. I don't know what to do, because in this one, I guess I'm not as aware on the fundamentals, right? So to me, it definitely looks like you can move from 18 to 22.5, and the options aren't really high enough to protect it. In these trades, most of the time, it seems like these stocks just generally don't do too well. But I think EA Sports had a pretty good earnings, and they probably are doing pretty good, right? So let me actually look at their chart. Yeah, so they've been going up. Take-Two has that. I think they have the Grand Theft Auto. I'm not really a video game player, but I think that's what they got. So to me, for those of you guys who trade it, might be interesting. For me, it's not as interesting just because I don't have a viewpoint either way. Deere. So these are like heavy construction companies. I think most of them had pretty good earnings, like Caterpillar and Honeywell. If you look at the stats, it's at the bottom 30%. The interesting about this is the amount of strangles people are buying, right? So you can see the June 92 put, 95 calls, and then these Jan 82 and 87 calls. So 92, 95. Let's actually see that. June. Right, so they're buying these, and they're buying these. Let's see. Yeah, so they're basically saying it's going to go beyond 92.50 and 95. What are they paying for these? They're paying $3, so it has to go below $89.50 or $98. $89.50 or $98. So here or here for it to make money. Seems like a pretty wide strangle, but you know, it was trading what, 84 in late February, and now it's 93. So maybe there is some upside to it. to me, what would be better if you don't have a strong belief either way is that you can almost wait until after earnings announcement, then buy the calls or puts, right? You just take your shot on which one is the right direction after the earnings, and then see how it goes. But yeah, I would tend to be more bullish on Deere, just because of all the other stocks that announced prior. Let me actually see what they're saying. It's implying a 2.8% move, and last 4 quarters it moved 2.2%. So yeah, if anything, maybe you can do like a strangle swap, right? So you buy these. Let me actually see if you. So you buy these. Right, for 219. Is that correct? No. Right, so you buy this for around $3, and then you will sell this for 150, right? So you're basically doing it for half price and hope that it doesn't move greater than the 92 or 95. After earnings, and then do that trade. So that might be something that's interesting, because the May's are 35 and the June's are 17. If I look at the chart right here, yeah, it's not that high, so it might actually be okay to own. Yeah, so I would say maybe that's the way to go. I don't have a strong opinion. Maybe I'll do that trade or not, or maybe the trade might be almost wait until afterwards. But if you look at Caterpillar after earnings, they've been doing pretty well. I think Honeywell. Yeah, after earnings, they're going up. So like a lot of these industrial stocks, seems like they're doing pretty good, but you know, maybe Deere is an exception. But anyway, that's what I got in Deere. Kate, I think they do those bags, right? Yeah, Kate Spade. Yeah, so they're kind of like same as Coach and those kind of stocks. Look at the stats. It's at the 60th percentile. Looks like a lot of puts are trading, but a lot of them are outside the range, so I don't know what the deal is here. Mostly looks like selling the May 33 puts. So let's see, this morning somebody sold it for 60. Sold it traded lower. So you see these purple, they're outside the market. So I'm not really sure what they mean exactly. It could be with stock, it could be anything, right? So it's not as clear. May 33. It's implying an 8.3% move, and it's moved 5.3% the last 4 earnings, but it did move 8.3% last 12 earnings on the average. Yeah, to me, I mean, like this. I mean, I don't know about Kate Spade. They seem like they're on the high-end bag side. 60 cents. 35. So 10% is about $3 move. Yeah, so it could go down to like $32. So if you sold these for 60, you'll probably lose 30. Actually, doesn't seem that bad. Let me see. It's only at the 60th percentile. You know, I'm gonna put in a 1 lot for 70. See what happens. I would pretty much, this would be the highest it's traded. So if it gets filled, I get filled. I'm only doing a 1 lot. I think I will make money, but it's not for sure. So I'm just gonna do a 1 lot, see how it goes. I talked about Macy's, so I have that strangle going on, and then soda. Let's check it out. Pretty even, 50th percentile. Yeah, so pretty much as middle of the road as you can make it. So I don't really have any opinion on this, but soda is implying an 8.2% move, and it moved 6.2%. So today, most of these stocks seems like they're implying a higher move than its movement in the past 4 earnings. So that's about it. For myself, the EEM. So I got filled on. So I got filled on these for 8 cents, right? The June. So I'm gonna go to July's and sell. I'm gonna sell these, the 10 delta options, and I'm gonna sell 3 of these. For 22. So I'm going to roll into these. I'm still not that comfortable selling calls, even though that is the strategy. But for some reason, just because so many people are buying calls, I'm not as eager. But that's what I'm going to do. I'm just rolling it, and then every month or so, I just collect. Now, this doesn't really, it's not really a strategy that would work with a Reg T account, but maybe if you had a PM account, you can actually start doing these, and you can kind of pay for your options, and you can always collect. So again, what I'm trying to do in my portfolio is basically have a positive theta and try to get a positive gamma. So even though I'm positive gamma here, it's kind of misleading. I just want to show you why. Because most of this gamma is coming from this Zynga. So I'm actually still short gamma, not long gamma, just so you guys know. It's skewing it because of this low dollar stock. But in terms of the premium, it's kind of, this is right up my alley of selling premium each month. So I'll try to have these kind of position. Other than I do follow the Trader Minute guys. I don't have any trade on from those guys yet, but if I do, those will be separate, and I just follow them just so because I like those guys, and I think they give some good advice. But anyway, hope this helped. Good trading, and I'll talk to you guys tomorrow.